Good morning, traders. Richard here, a quick Ichimoku cloud chart market review of NVIDIA. Looking back at 2025, really strong rally since the cloud chart crossed here back in May. And really strong rally, but now we have a period of consolidation. It's really a multi-month long, I call it a base. If we look at the high there and the low there, we draw kind of a square there. This is a really big base. You could argue that that one in there is also a smaller base within a base. It looks like it wants to do a double bottom chart pattern formation and then break out from that zone. Now, more recently, we did get a nice swing trade rebound from the bottom end of the cloud chart support levels here. Let me just zoom in here so we can get a bit closer. From these old cloud chart support levels here, strong rebound from that level, broke through the bottom in the cloud, then sliced through the top end cloud chart resistance, but unfortunately dipped back below that. But as long as we're above this bottom end cloud chart support zone, this is a new kind of bull rally emerging. We don't still have it, still an orange outlook there. To be truly bullish, we need to be back above the top end of the Ichimoku cloud. So it's kind of in accumulation phase here. As long as that support level holds, we can still be buying NVIDIA around these levels in view of a potential breakout out of this entire consolidation base and sideways price movement. But so far so good. NVIDIA rebound rally worked well here, and then it did manage to dip above the top end of the cloud, but we're back above the bottom end of the cloud, so that's the good news for now. Let's take a look at the weekly Ichimoku cloud. On the weekly Ichimoku cloud, we can see had a beautiful rally back in the first quarter of 2023. Been a really strong rally there. Had a bit of a correction here, another rebound from the cloud there. But the risk is now that we are consolidating here. Key support zones, we got all these levels off the daily Ichimoku cloud, but levels to watch out for on the weekly, since we now flirting with the standard line and the turning line there for support and resistance. We really need to make a clear break past these key levels, as well as the top end of the front in the cloud. So the top end of the front in the cloud is a key support zone, so watching very closely to see if we stay above this 185 zone. And any kind of weakness there, we could see it dip back below to test this this level at 163, and the line in the sand here is this 149 zone. So these are the downside risk targets. If support fails, significant support fails on the daily, we could see these levels being tested. So keep that in mind. We might have something similar to what we've had here in the Q1 of 2025 here. So keep an eye on those. Are the downside risk factors or risk targets if support fails on the daily Ichimoku cloud. Next up is turning to the StarMine models. We can see it scores highly on the price momentum score, so we could see some momentum accelerate. The analyst revision score, that's quite high. A percentile rank of 92 means the analysts are upgrading their numbers, are quite bullish on the stock. Short interest is a percentile rank of 93, which means there's very little short interest in the stock, so it's not a stock that people like to short. And the earnings quality rank is percentile rank of 75. It can be higher, but it's still in the green zone, so the quality earnings is there. The earnings quality rank digs deep into the income statement and balance sheet to see what drives the revenue, where's the risk factors there. So there's a lot of multiple factors that goes into that ranking. Not much credit risk here. The percentile rankings there is all in the green. The only problem here is intrinsic valuation, relative valuation, and insider selling. All these are kind of in the bearish mode. Then the bottom, 10, 20, and bottom 24 percentile ranking for the market in terms of intrinsic valuation. Relative valuation also quite expensive. You can see here on a PE, EBITDA, EV to sales ratios. These are all kind of in the bottom side of the market. So it is quite a pricey stock. But what's interesting, if you're going to do a reverse discounted cash flow analysis over the next couple of years, and you kind of see what growth rate is the current price implying, a market implied growth rate of 22% for the next couple of years based on the current price. So it's not too rich at this stage. It gives us a little bit more comfort that we're happy swing trade or buying this for both swing trade, medium and long term kind of position. But so far so good. Price momentum's looking good. ARM scores high. It's just the relative valuation ratings that remains of concern. So it's a high quality stock, but it's quite a expensive name. Just back to the chart, just keep a very close eye for a potential continuation of the breakout above the top in the cloud. If not, it's within accumulation zone as long as it stays above this bottom in cloud chart support zone. Thank you for watching. Until next time, happy cloud chart trading. Bye for now.